Hey, good afternoon, everyone. I'm Charles Payne. This is Making Money. All right, so here's my take on this market. And I want to start with the doubters of AI, or the so-called AI trade. Still saying it's mostly hype. And of course, believers point to the upside growth. And just to give you an example of this, each one of these dots represents 2,500 people, 8.1 billion people on the planet. That little red dot is where we are. That little red dot is causing all of these bottlenecks and everything. So imagine, by the way, the green stuff is free stuff. Imagine once this green and red starts to move up there. The bottom line is there's a lot of room to the upside. Of course, then some folks try to say, well, then keep it simple, stay in the market, against your own instincts and just focus on earnings because that's where it's been. And it's true. Now, here's the thing, though. Here's the rub with earnings. Earnings have been going up for a long time. You can see corporate profits as a share of GDP just keep marching higher and higher. However, it's been more selective, right? Look at this sales, the top line, sales shares of the top 1%. So it's kind of interesting. Since the secular bull market, we've had a concentration of names that are really, really knocking the ball out of the park. Now, we know here recently earnings estimates have been soaring. That's one of the reasons for the rally this year. So 2026, at the beginning of the year, Wall Street thought we'd be at $308 for the year. We're at $330. So one of the concerns is, well, maybe we're pulling these earnings forward, right? We've done that before, but this is 2027. We started at 354, we're at 380. The change is actually larger, 7.3% than it is for this year. So guess what? We're looking pretty good overall there. And of course, speaking of earnings, very critical week earnings, for this rally. In fact, some are now saying we need to catch down. I know it's not catch up, catch down, right? Here's the thing. Despite the fact that AI infrastructure hasn't done all the heavy lifting, energy's done a lot. You've got S&P XAI energy actually down. Some think we have to pull down. So despite the huge spike in earnings, these technicians and some others are saying that the chip names have to pull down to the rest of the market. Of course, that brings us to Nvidia, the center of all the action. When I say the center of all the action, it is the center of all the action. Look at that orbit. Look at these names here, right? A major beat from Nvidia would be like the coronation of Thor as king. This rally would keep going big time. All right, joining me now, RDS Wealth President and CEO Dale Smothers. I know you kind of felt that was for you right there, Dale. You've been killing it. But let's talk about this for a moment. Are you concerned, all these tentacles, you got Nvidia in the middle, you've got Oracle, you've got OpenAI, you've got SoftBank, you've got smaller names. Some are saying this is a problem, this circular financing and all these things. You're not concerned about that?
Yeah, I'm not necessarily concerned. I think we have to be cautiously optimistic here, and we've got to pay attention because, as you've said, Nvidia has clearly become a load-bearing wall for the overall sector, for sure, and even the major index in general. And the circular financing, I know if you look at it, it looks a lot like that Three Stooges skit where $10 is passing around from one person to the next and everybody appears richer. But the fundamentals are here, and as long as AI demand continues to climb higher, I think Nvidia and the entire sector climbs higher.
All right, so here's the thing. Nvidia earnings are coming out Wednesday, and the thing is, folks, earnings estimates continue to rise. I love this. Whenever I see a stock like this, they beat, and sequentially the numbers are going up. But here's the rub. The beats have been small, single-digit beats, and we know that this stock hasn't reacted well to earnings. So there's a lot of pressure. We know they're going to do well, but how well do they have to do? Because right now, Nvidia is pulling back a little bit.
Yeah, I think just as we said, Nvidia is kind of the center of it all, and all eyes will be on that when it reports on Wednesday. It's got to do better than just expected, I think, for this to boom out of proportion, perhaps more than we even imagined. But here's the thing. I think Nvidia takes us higher throughout the course of the year. Right. No matter what happens in this earnings, stay the course. S&P 500 at 8,000 is certainly a possibility.
That's your target, yeah. So, and to your point, we've seen it react, pull back, and then regain its footing, and then continue to march higher. You've had a message for for investors in general, right? About being cautious. Explain what you're trying to do here, because I feel like really now, I know we always want to be disciplined, but I feel like this window of opportunity may not never come around again, and so I'm like, go for it. But seems like you're saying, be careful though.
Sure, I think discipline is different than maybe sitting on the sidelines for sure. Discipline is knowing where you need to be, Charles. If you are in your retirement journey and you're just a few years away, don't get chasing returns here. Don't get discouraged perhaps if you're not making 20%, 30% in your portfolio. Understanding where you need to be and maintaining that discipline, knowing this is an opportunity, taking advantage of that opportunity, but making sure you stick to your plan and not overexposed to risk.
All right, so let's bring up risk. Some of the risk that you see right now in the market, geopolitical tensions, sticky inflation, domestic politics. I think you're referring to the midterm elections.
Midterm elections, yes. That's a history there for us. If we play midterm elections, we know volatility is probably coming in closer to the end of the year. This is why I think it's a bumpy road to 8,000 for the S&P.
Yeah, I know we've shown this table over and over again. Going into midterms, we're down. Coming out of them, typically the market makes a pretty good rebound. Geopolitical tensions are tough, right? You know, we've had them over our head throughout this entire rally. In fact, the rally sort of began when the conflict in Iran began. So how does someone square all of that? Is there a point where we no longer can ignore that?
Yeah, artificial intelligence clearly pulled us out of this geopolitical tension that we saw. And it's funny because what was once being punished at the end of 2025, AI CapEx spending, is now being rewarded. But I think geopolitical events that are coming could make sticky inflation, and sticky inflation doesn't help the market for sure.
Let's talk about the areas that you like this technology renaissance. On the semiconductors, Nvidia, Micron, cloud, Amazon, Google, Microsoft. I'm going to ask you a little bit about the infrastructure. Nebius, I hit a lot last week. They're pulling back a little bit. There was a piece out on CoreWeave about the insider selling. Like they're dumping a lot of stock. And I think even early this morning when all these names were up, that was in the red. How concerning is something like that for you?
I saw that. You know, we've been a holder of CoreWeave essentially since its IPO, believe that name has a lot of potential, but it's got to manage its debt. CoreWeave is one of those that's in that secular type of spending with Nvidia. I think as long as Nvidia still backs CoreWeave, we're a big player with CoreWeave, but we're keeping a very close eye on it, and that's where Nebius comes in.
The only name I don't know is SIDU. I've seen it come across the ticker, and I love the space place. So tell us about that.
Yeah, I think this is a moonshot, pun intended. You've got to realize that SpaceX is going to bring a lot of momentum to space in general. That, along with Rocket Lab, may be a good place to put some money for our clients that are looking for optimism and okay with, clearly, some volatility that will come with that. Buying those names on the dip present a good opportunity.
A couple of weeks ago, INQ had some great developments, and the quantum names have come back big time. But a lot of pundits say, hey, they're still not ready for prime time. So, but why be in the stock now?
Yeah, you trade that stock. That's a trading stock for us. We like buying it at the support and then, of course, trading it, trimming it, if you will, at the resistance. I think names like this in the quantum, clearly, whenever they break out, they're going to go big. But taking opportunity in that volatility and doing trading inside of those names, it makes you a lot of money.
And before I let you go, Microsoft and Google or Alphabet. So anyway, Ackman sells all of his Google to buy Microsoft, which felt counterintuitive, but software names are coming back. Really, the stealth move is becoming less stealthy.
They are coming back. You've got to own leadership here. You have got to continue to own these names. As long as Nvidia stays strong, AI demand stays strong, names like this are going to benefit Google, Amazon, Microsoft. I think even Apple here is a good, strong name to hold as a core in your earning, in your portfolio.
Great stuff, Dale. You've been killing it, my man.
Thank you, sir.
Good seeing you. All right, folks, now my next guest notes